The need to attract foreign direct investments, FDIs, has resulted in tax competition among jurisdictions around the world as countries constantly review their tax policies to reduce tax and fiscal burdens that stand in the way of investments into the country. However, a dispute between Nigerian tax authorities and MultiChoice Group Limited, Africa's biggest pay TV provider, intensified on Wednesday, the 23rd of August, showcasing the risk international firms face as the continent's largest economy tries to bolster revenue collection. In a recent development, the tax appeal tribunal sitting in Lagos ordered MultiChoice Nigeria Limited to pay 50% of 1.8 trillion naira, which the Federal Inland Revenue Service had determined through a forensic audit to be the amount in taxes the company had failed to pay to the federal government in the past assessment years. It will be recalled that the FRS had in July announced its plan to engage some commercial banks as agents to freeze over 1.8 trillion naira from accounts of MultiChoice Nigeria Limited and MultiChoice Africa as a result of the group's continued refusal to grant FRS access to their servers for audit, and it discovered that the companies persistently breached all agreements and undertakings with the FRS. Despite Nigeria's concerted efforts aimed at improving tax collection and administration, the tax to GDP ratio has remained around 6% for some years, making it one of the lowest in the world. I introduced him earlier. He's the principal at Lilo Barristers and Solicitors, Mr. Afolabi Elebiju. Good afternoon, Mr. Elebiju. Thank you for your time.
Good afternoon, Tolu. Thank you for having me. Good afternoon, viewers.
Yeah, thank you so much for your time, sir. First time on the show, really appreciate you. Now, a recent court ruling ordered, I just want to cite that example, DSTV to pay back about 900 billion tax backlog to the federal government following the backlog of 1.8 trillion naira discovery that the company had failed to pay in the past assessment years. Now, how would you react to this kind of judgment, or how will you react to it, this ruling?
Okay, thank you very much, Tolu. Really, this is actually an exercise of powers vested in the Tax Appeal Tribunal. You know, the fifth schedule to the FRS Establishment Act essentially empowers the tribunal where a taxpayer has an appeal, either against it or that it filed against the FRS, to, in appropriate circumstances, order that the taxpayer make a deposit of 50% of the amount in issue of the tax liability being disputed, or 10%, you know, and essentially, to the extent that the requirements are met, you know, I haven't read the case and I have not really followed it, you know, but to the extent that the requirements are met, you know, it's an order that is not strange at all. The law enables the TAT to exercise that jurisdiction. And, you know, there are some other considerations. For example, if the TAT believes that the taxpayer has not been compliant with filing returns and providing documents and data, or the appeal itself is frivolous, and the taxpayer has more or less has one or two reasons why it is expedient for the Tax Appeal Tribunal to exercise that discretion, you know, in favor of the FRS, it could. You know, so the important thing here is that it is not a strange provision, and it does not, it doesn't mean that ultimately the FRS will win, or that the MultiChoice will lose, or vice versa. It is just something pending the determination of the appeal. It's an interim measure.
Moving on, we've also seen a similar display of an event in 2018 with also MTN Nigeria, you know, where the Attorney General of the Federation, a total comes to pay a total of about $2 billion tax arrears. Now, that's my problem is, don't you think that our tax policy leaves a little bit of space, and would this not affect the large corporates? Or what do you think is the problem here? Is there a deficiency somewhere?
Okay. All right, thank you, Tolu. I think to start with, tax is statutory, and that is not negotiable. The ability to collect tax or exercise taxing rights or incidental powers must be statutorily enacted, and the basis of this is that the revenue can only exercise powers that they have, and the taxpayers also has rights. So if the revenue or government or somebody purporting to be acting on behalf of the revenue purports to take any action, it must be able to meet the test of legality, the test of validity under the tax laws. So if the revenue says a particular organization is not compliant with the tax provisions, well, it has the opportunity of convincing the tax appeal tribunal or the federal high court or the court of appeal and ultimately the Supreme Court of its case. The taxpayer is also not bereft of opportunity of also defending that case. And that is why many times, sometimes the revenue wins, sometimes the taxpayer wins. At the end of the day, it is the law, the provisions of the law that matters. Even where the revenue has discretions, powers to exercise discretion vested in it, those discretions must be exercised reasonably and judiciously, not arbitrarily or perversely. So a situation where, for example, you mentioned MTN, when the AG was trying to collect, so to say, tax revenues on behalf of the federal government, there were many opportunities, there were many grounds on which those could have been questioned or challenged. But ultimately, I think they ultimately reached some understanding because there's due process. You cannot collect tax, that is disputed otherwise than through the dispute resolution provisions of the tax laws. You assess me to tax, I challenge it by objecting to it, and then you review my objection, the grounds of my objection. If you think my objections do not hold water, then you insist on your position by issuing what we call a notice of refusal to amend, and that gives me an ability to appeal, to the tax appeal tribunal. And of course, the tax appeal tribunal will then determine the dispute, and ultimately their decision will be what we hold, unless one of the parties again further appeals to the Federal High Court. Ultimately, the summary about the tax disputes or tax administration and tax compliance is that the law must be complied with. The taxpayer, must comply with the law. The revenue must comply with the law. Failure to comply by the revenue, for example, if there is a stipulated process for taking certain actions and you do not take those actions, the court is likely to invalidate your decision. So because of this, even the revenue is wary to ensure that they are acting based on the law. And when we come to whether foreign investors can be nervous, really there is no basis for foreign investors to be nervous, because if the revenue does anything outside the law, the courts are likely to set aside that particular action. The courts are likely to hold that the action of the revenue is ultra vires. However, if a taxpayer didn't comply with the law, the courts are likely to hold that, the taxpayer is at fault. And if there are penalties, then the taxpayer will be bound to pay those penalties.
Mr. Elebiju, I'd like you to tilt your device a bit so that we could get a headroom, so that we could get a better picture of you. Yes, something like that. Yes, it's yeah, I guess it's better that way. Now I'm also seeing that the FRS had in February also disclosed that it was working to blocking about $10 billion tax leakage by multinational corporations, operating in illicit profit shifting and all of that. My question is that what sort of reform do you think we need, or do we need to have to checkmate all of this and increase compliance?
Okay, thank you again, Tolu. I think we are well on our way. Transfer pricing definitely is a huge avenue for illicit financial flows, and essentially it is an arrangement whereby you shift profits from a jurisdiction where you could have paid higher taxes to a jurisdiction where you are not paying taxes at all, or you are paying very minimal taxes. In other words, the taxes you are paying in this jurisdiction where you are generating substantial economic revenue, or where substantial economic activity is going on, is not commensurate, with the taxes you are paying. So what has happened in Nigeria is that in 2012, we had our inaugural transfer pricing regulations. That transfer pricing regulations has been further improved with the issuance of the transfer pricing regulations of 2018. And this transfer pricing regulation essentially follows the OECD model. And the documentation requirements, the reporting requirements under the transfer pricing regulations right now, I think they are very helpful if implemented to help check abuses, tax abuses and transfer mispricing, So I think the amendments made to the tax laws by virtue of the Finance Act 2020, coupled with the transfer pricing regulations themselves, puts Nigeria in a very good position to checkmate transfer pricing. Before the transfer pricing regulations were issued, the first one was issued in 2012, many commentators, including myself, had noted that our tax avoidance regime or provisions were kind of basic, but that hole has been plugged. So it's now a function of capacity and energy on behalf of the FRS, to implement these provisions. And so far, FRS is showing that intention. Recently, we had the first transfer pricing case in Nigeria, and what we see, the outlook of what we see is that there's going to be a lot more activity, and multinationals that have related party transactions in Nigeria, they're really paying serious attention to transfer pricing now, because non-compliance can be actually very, very costly.
Well, staying with the interest of the international companies or multinational companies now, a conducive business environment, of course, is only possible in the case of regulatory and transparent policies. But many of them have also raised complaints of multiple taxation and sometimes difficulties in moving out funds. If we're talking about ease of doing business, what sort of trade policies do you think will stimulate better corporate behaviors?
Okay, first, thank you again, Tolu. Well, multiple taxation is definitely a negative. We should sort that out. And I think government was trying to see what they could do by enacting the approved list of taxes collection legislation, which right now, there are lots of questions whether there's even whether that law itself is valid and all of that. However, the intent, and also as espoused in the national tax policy, is to discourage, if not totally remove, multiple taxation. So that's something which deters investors, which doesn't project our investment attractiveness in positive light. And definitely, I as a practitioner myself, I support every effort to get that out of the way. In terms of making the investment climate attractive, well, it's not a destination, it's a journey, and I think government and all stakeholders have to keep working, because the truth of the matter is that there's competition for global capital, and we have to really position ourselves as a country to attract foreign investment. This economy can do with much more foreign investment, and the more we send negative signals, to the investment community, the more we are self-sabotaging ourselves, the more we are harming ourselves, and I don't know if I covered all the elements of your question, but from a multiple taxation point of view, government actually has said they don't want to do it. However, because we have 3 different tiers of government in Nigeria, and everybody is under pressure to generate funds, somehow we're still seeing instances of multiple taxation around. And how do we improve compliance? How do we make tax compliance easy for taxpayers? Actually, this should be a cardinal objective, and I think again the tax policy, national tax policy, also has highlighted this. And part of how this is being looked at is to actually move from direct taxation to shift, the focus from direct taxation to indirect taxation, where it's easier to effect compliance, and even the energies, the cost of compliance will be less substantial as in a direct taxation situation. I think there's a country, maybe Estonia or so, where they just pay only one tax, and your tax filing just one sheet of paper. So gradually, I think we'll get there, because by reason of the reforms that has been going on, well, the whole idea is to reduce the compliance burden, the total time to comply, and generally the compliance burden on taxpayers, to reduce it to the barest minimum, so that it's going to be easy for taxpayers to comply. Then for multinationals, multinationals have resources. They have tax department, they have tax lawyers and all of that. So I think it's whatever is required for multinationals to comply, they're ready to make the investment. And also because there are reputational issues with non-compliance, I think generally the people we need to worry more about maybe the informal sector, the small and medium scale enterprises and so on. However, the flip side is that multinationals, because they have resources, they are also able to invest more in tax avoidance and tax planning schemes. Again, the law doesn't prevent them from paying the least amount of tax they can legally pay. What the law frowns at is evading taxes. So to the extent that they are not evading taxes, but they are optimizing their tax exposure, there is nothing to be concerned about. And anytime the revenue has an issue that, maybe the tax structure doesn't sound right, well, we can go to there can be a tax dispute, we can engage, and then if we are unable to agree, let the tax appeal tribunal determine the matter.
Brilliant submissions. If we can do this in 1 minute, we've actually run out of time. But I just like to ask, what can be done for us to improve this tax to GDP ratio that we'd always talk about, 6%? 6%. When are we going to get higher? What can we do to expand this net?
Okay, I think since we don't have much time, the outline of thoughts that are already set out in the national tax policy, I think the most current version is the 2017 or so. Yeah, those principles, those action points, if we keep to them, we will improve the tax to GDP ratio, and to the extent that we keep sensitizing the populace about importance of paying taxes, and we also ensure that we have our moral suasion, right, where tax revenues are well deployed, not wastefully spent and all of that. I think all this we contribute to improving the tax to GDP ratio, and as well the enforcement capacity of the revenue authorities is also very critical.
All right, thank you very much. I must thank you. It's been really nice talking to you, principally law barristers and solicitors, Mr. Afolabi Elebiju. We hope to have you join us anytime soon to discuss tax issues, of course, and break it down for us that you've just done.
It will be my pleasure, Tolu. Thank you very much for having me. Have a good day.
All right, enjoy the rest of your day.